I grew up in a very much migrant household where there were only two options, doctor or engineer.
Today, I have the pleasure of introducing not just an incredible entrepreneur, but one of my closest friends, Nikhil Sreedhar.
We've known each other for such a long time. And sometimes when I'm procrastinating and I know I should be doing something, I'm like, man, what is Nikhil doing in this situation? I need to be better.
From a middle-class household, Nikhil made his first major investment at just 15 years old.
Here I am as a 15-year-old after school, went out, spoke to 3 different banks, sitting down with one of their financial planners, and they're pitching to me to put my money with them. And I remember I had my backpack and I had my little notepad and my pencil and everything.
In this episode, Nikhil dives deep into the challenges of financial literacy and shares how his high school commerce teacher sparked his path towards finance.
He was a teacher, came to school in a $400,000 Porsche, had a construction company on the side, had a security company on the side, and he basically said, I don't care about you kids. If you want to learn how to make money, I'll teach you how to do it in this class.
Wow.
You'll hear about the values he learned from his father.
Growing up, Dad was one of the first people that I knew that had made the family buy into investment properties.
And the unique wisdoms he's gained from years of managing wealth for top clients.
They would invest after they made a lot of money in other avenues. So keep it for the next generations. They're not going to do stuff where you can do 2x or 3x on your money in 12 months, for example.
Are you curious how the wealthy invest? Nikhil breaks it all down, including some top advice for anyone looking to start with under $10,000 of investment. So let's jump in. Welcome to the Migrant Mentor podcast.
Nikhil, I'm so proud to have you on the Migrant Mentor podcast. I've known you for about 12 years now, and I've known you through your whole entrepreneurial journey from start to finish, but I'm so glad you're on the podcast because you're one of my closest friends, and people should learn about your journey. People should learn about finance and financial literacy. In your experience, 1 being no financial literacy in Australia versus 10 having your depth of knowledge of financial literacy. What do you think the general population has in that scale?
I would say across the board, I would say most people, I would say are at a 4 compared to where they could be.
Why do you think that is though?
Is
it our educational system?
There's the educational part for sure. But even with the education, there's so much more that people can hear about and learn about that aren't in the textbooks, that only comes from practice. And I've been fortunate enough to be in areas where you kind of see what like very wealthy people do and can do, and strategies that I didn't even learn in university, or I didn't even learn in my first couple of years as an accountant. Like it was only after seeing it in practice with incredibly wealthy, clients that you're like, wow, there's a whole world here.
You learnt a lot by yourself though. I remember you telling me a while ago that when you were 15, 16, you invested about 3 or 4 grand in shares. Yeah. You lost all of it, but you learnt so much that you then saved 4 grand, 5 grand for your wedding fund. Tell us that discovery process. Like, what did you learn by risking that much money and failing at it?
Yeah. Well, I grew up in a very much migrant household where there were only 2 options, doctor or engineer. And that was my entire upbringing, primary school, even parts of high school. But then everything kind of changed in year 9 when I went into commerce class. It was the first time you could actually choose your own subject. I chose to do commerce. Everything started to click from that moment on. And it wasn't because of the course. It was because there was a very good teacher that taught us. His name was Mr. Joseph, and I would say he's probably the reason that I went down this path in my career. What was interesting about his classes and his courses was he started, I remember it was like, I don't care about you kids. If you want to learn how to make money, I'll teach you how to do it in this class.
Wow.
Like he was a teacher, came to school in a $400,000 old school Ford, drove a Porsche, had a construction company on the side, had a security company on the side. And he basically said, this is one of the few jobs where I get 12 weeks off a year and I get to teach people how to make money. So that's when things started for me. And in his classes, we learnt about shares and share trading, and that's when I took the plunge and, whatever money I had at the time, I put it, 3K into a penny stock. And that was that story right there of getting into the markets for the first time in year 9 with real money.
Was it the $400,000 car? Because you and I always talk about expensive cars and getting expensive cars one day. Or was it the gamification of winning in shares?
I think it was the gamification of shares, because I remember when we were in that class, the ASX runs, I think they still run it now, but they run a share trading game. You can make an account. You get $50,000 worth of notional money. And we were playing that game at school in year 9 with, the aid of this commerce teacher. And that's how I got into the whole space. And I kind of saw my portfolio went from 50 grand to like 75 grand in 3 months. And I'm like, oh, this is kind of cool. But obviously it's easy to put bets on the market with fake money. But, when you have 3 grand worth of your own money, I spent a bit of time doing research that if I did it now, I'd know it was the wrong research. But that's how I lost all of it in penny stocks.
I remember that game. I remember starting that game with 50,000. I think it ended up with 35,000. I was like, yeah, finance isn't for me. Tell us about I think it's fascinating and awesome that the wedding fund that you started. What was your goal and objective with that in the first place?
Yeah, so it kind of evolved into a wedding fund. I used to do a bit of odd jobs here and there working at Macca's. I had some money on the side, and my perspective then was to go out and invest it, seeing that I could do some compound interest stuff. So here I am as a 15-year-old after school, went out, spoke to 3 different banks, sitting down with one of their financial planners, and they're pitching to me to put my money with them. It was 3 grand, not a lot of money. And I remember I had my backpack and I had my little notepad and my pencil and everything. And I'd be sitting in front of someone wearing a suit and tie. And I went to 3 different banks, didn't even tell my parents. Went in, made some bookings and said, I got some money, I want to invest it. And that's when what became the wedding fund started off. Philosophy from my parents was you go out, go and work and, make a bit of money, but don't spend it, like save it. If you need money for school, recess time or whatever, just take it from us. So that became bigger and bigger. And I think around uni days, I'm like, maybe I'll end up getting married 2 or 3 years after graduating. And I'm like, shit, these weddings are quite expensive. So that eventually became the wedding fund and just became bigger and bigger.
Yeah, and I can see traits, the work ethic, the attention to detail when you're going to the banks with your little notepad. What did you do with that money? If I'm new to stocks, if I'm new to investment, what did you actually do? You went to the bank, the financial advisor said what to you? What can I do with this money?
At the time, there were no such thing as ETFs or some of these much more accessible products that people have access to now. So back then, you kind of had to go to a bank and they would put together what would be called a wrap portfolio, and they would wrap mutual funds or managed funds into that portfolio. So I went to a bank. I remember the person's name still, but it was at NAB, and she put together this portfolio of like 7 different managed funds, and it was wrapped in an MLC Horizon 5 portfolio structure or whatever. And that was my portfolio, and we just put money into it every single month, and that just became bigger and bigger.
Can people still do that now? Because there's so much access to technology and doing it yourself. What advice would you give someone that's going, okay, I've got a bit of money, I've got 6-7 grand, I want to put it in something and grow it to 20 grand in 5 years? What advice would you give in that scenario?
If you don't have an interest in picking selective stocks or picking selective regions that you want to invest in, the very best bet that you can do is go to a big company like a Vanguard or a Beta Shares and just get the global share fund. You get a bit of everything, nice and easy, very vanilla, but it actually beats many stock pickers. Like, you can go toe to toe with some of the best fund managers in the country, and over the long term, they all lose against the index.
Right, okay.
So buying a portfolio of index investments where you've got a little bit of Apple, a little bit of everything in just one product, you will, over the long term, do much better than a very smart, super polished Wall Street investor who thinks that they know what they're doing, because it's very, very challenging to beat the market year on year over the very long term.
And speaking of the market, you mentioned earlier that you learn a lot of your financial literacy working at Macquarie Bank, managing rich people's money. What takeaways did you take where you go, oh wow, I can't believe they're doing it this way? Because I remember you sharing some stories of how rich people move their money around and make more money for them.
Yeah.
What kind of things that did you learn from that you've adapted in your own financial strategies?
A few things. So what I observed is that they would invest after they made a lot of money in other avenues. So they came to us and said, I've made 5, 10, 15, $20 million.
Yep.
Can you help me preserve it and keep it for the next generations? Be safe with the investments. They're not going to do stuff where you can do 2x or 3x on your money in 12 months, for example. And that's when I learned that if I wanted to be on the other side of that phone call and be the client, it wasn't going to be just doing vanilla investing and, just letting the portfolio go up. They all came from business and they all made their money concentrating a lot of time and effort and resources for a period of time, whether it's 5, 10, 15 years, and then cashing out and making a big lump sum. They put all their eggs in one basket,
Right.
and grew that basket, and then they sold out, and then they came to us for like something nice and easy and passive.
Right. Wow. We always say that rich people keep getting richer. And obviously the parents that are rich or they've made it instill such strong financial intelligence with the kids most of the time.
Yeah.
Most of the time. Is there anything that your parents taught you at that early age with money that you still carry on today?
Yeah, a lot. I would say parents have done quite well for themselves, and I think a big part of that is dad's attitude to money. It's very fluid in the sense that money will come, money will go. It's not something to be like super attached to.
Attached. Yeah, I was going to say attached. Emotionally attached as well.
Yeah, emotionally attached to it or something like that. Growing up, Dad was one of the first people that I knew that had made the family buy into investment properties, and we were like 4 or 5 years into the country and just bought our own place, risking capital. And then also he's quite logical for a guy that's not from finance. He's in healthcare. He's very good at the numbers, very easy to see a good idea versus a bad idea.
Yeah.
So like I kind of observed that growing up, that he would do numbers relatively quickly and kind of go, oh, that's not a good investment. I observed that up until about year 9, year 10, when I started taking interest in markets and money and so forth. And then over time, I started teaching him. And then through work.
What is it that Yoda became? The master
became exactly.
student.
Exactly. So went to uni, further into accounting and working at Macquarie. Now it's completely switched over. I manage the parents' money now.
Yeah. And do you think that's instinct? Because your dad has this instinct to pick the right things, but obviously he's failed at a few things, and obviously we all do. Do you think that growth difference when you kind of took over was because he was very instinct and gut feeling, where you were then started to learn a lot more, right?
Yeah. Going back at some of the properties that the family owns, they're not properties that I'd buy now after knowing what I know now. They worked, they did well out of them, but it's really interesting that when you're in the space, I've probably worked with over 500 families or seen how they manage their money, whether it be as an accountant, whether it be as a financial planner. These are clients that I directly dealt with, or there were clients that my colleagues dealt with. And you see and learn how different people of different levels of wealth manage their money. And there's like lots of ways to make money.
Yeah. We've known each other for such a long time. There was times over the years where Saturday morning at 2 a.m. in the morning, we'd be in the office working on our own businesses. Those are some great times. But you've always had this ridiculous work ethic. And sometimes when I'm procrastinating and I know I should be doing something, I'm like, man, what is Nikhil doing in this situation? I need to be better. And so when you feel uninspired or lack motivation, what are you doing in those scenarios, in those situations? Are you looking back at your parents and their work ethics, or is that ingrained so deeply at that level? Or are there strategies and tools that you go, man, I'm not feeling up to doing work, but I need to do X, Y, and Z?
Yeah. That's a good question. So work ethic wise, I think it was instilled in me as a kid. Firstly, observed parents, especially dad. He worked 6 days a week for his entire career.
Even now?
I think till about 2 years ago.
Yeah.
But also as a kid, I never had a night off. I was always in something. So whether it was tutoring, very much a migrant thing.
Kumon?
Kumon, yeah, I did a lot of Kumon. So, and then I got really good at tennis and swimming. So I'd be training, doing squad level swimming maybe two times a week. And then by the time it was, year 9, year 10, year 11, year 12, almost every night I had something booked in, whether it was tutoring for HSC, training for swimming, or training for tennis. I didn't have a night to myself until about 9 o'clock every night.
Wow.
And then that's just continued. I went to university. And I went to university at nighttime because I was working full-time throughout the day.
Oh, right, okay.
I'd spend 6 to 9 Monday, Tuesday, Wednesday at university, and then 9 to 5 at work. So ever since leaving university, it's just been work until 9 or 10, and that is the norm.
2 questions. Do you not get burnt out? Because most people that I know get burnt out. And when they get burnt out, they're completely unproductive. And I go through those periods as well. But I've got coping mechanisms like meditation and self-care. Do you not get burnt out?
100%, all the time. Like there are periods where you sit down to work, but you spend an hour on YouTube. There are bits when you're like in an office or in a room, or you're like, you've made your coffee and you've sat down and you're like, I'm going to get this stuff done. And you just find that an hour a bit later, you're on TikTok. Happens all the time. In terms of coping mechanisms, I just let that time ride out, give it 2 or 3 days of just watching YouTube, and then you're back on doing the work in a way. But what I've always stood by is to work around my social calendar. If there is something to do with friends or family, I'll always attend and I'll always work around that. And by work, I mean being at the desk in front of the computer or the laptop, trying to do something that's on my to-do list. Not that I spend an hour completely doing it, but even if I can do 30% of what I hope to do, that's better than 0.
Yeah, okay. So when you're feeling uninspired, when you're feeling unmotivated, it sounds like you kind of ride those emotions out, but you don't get angry at yourself about it. You're not like, oh, I need to be doing this, I need to be doing this. You kind of, you just, time's relative. You'll do it when you feel like doing it, when you truly feel like doing it, kind of thing.
Yeah, my wife, Millie, she'll say that I do get angry, and I go through moments of just like annoyed at things and agitated. But yeah, I just let it ride out.
Yeah. Speaking of Millie, recently married, working full time, you're working on Handle. How do you keep that work-life balance? You've got Taco, the dog.
Yeah, I would say 3 buckets of life being health, wealth, and relationships. And at least on a weekly basis, I try to balance and put effort into all 3 of those buckets. So throughout the week, there's always a bit of time for health, so a bit of training, bit of F45. There's always a bit of time for wealth. I would say a bit more time goes towards that in terms of working and building a career. And obviously when Millie's home every night, we've always got, dinner together. We vibe out in the nighttime, watch some TV shows, play with Taka. So there's always a couple of hours every night that we're always doing stuff. She goes to bed relatively early. I go to the desk and work till about 1. So, so that's the usual nighttime routine. So I'll always work, but around my social calendar in a way.
Yeah, gotcha. It sounds like you've learned quite a lot growing up, and now you're learning to bucket and contain your social calendar, your work calendar, your health calendar. When I started being friends with you, you weren't like that at all. You would just work. Besides me bringing you out of your shell.
100%.
When did that change, and where did that journey take you?
I think back then, I only thought work was the only way out. And also I was single. I didn't really know how to date.
We won't get into that one.
And that was the only thing that I knew I could control. But like now, in a way, distilled to those 3 buckets of health, wealth, and relationships, I genuinely believe that I'm entitled to have the maximum enjoyment in both. So it just requires you to, spend time on all 3 of those things throughout the week.
There's been ups and downs, but I've never known you to show any negative emotions like that anger. I've never seen you angry. I've never seen you sad, really, or upset. But I remember you telling me a few weeks ago that when you were working at BCG Ventures, that you were made redundant. We've all been made redundant. We've all had ebbs and flows in our career. But I've never seen you show those frustrations and those sadness and those negative emotions. Is it because you're containing those emotions and processing them yourself? Or do you have a very logical mindset where you're like, cool, I've gotten let go, what's next?
I have this attitude with the day job, and it is only a means to an end. When I was let go at BCG, I was still running the business on the side. So it was always like a job that did some stuff and I could use that to get more skills and all that kind of thing. But I've never gone into a job going, I'm going to spend the next 5, 10, 15 years to become the CEO of that company or be the partner at that firm. It was only to go in, learn some stuff, move on, because I've always seen myself being in business. So when that happened, I'm like, maybe the time is right. It was coming up to 2 years. Millie will definitely say that I don't express enough emotion. In other parts of my life, there's a lot of stuff in there. Not that it's bottling up to explode and become a crazy man one day.
Yeah.
But like, I feel as an only child as well, I handle emotions differently in the sense that I'm quite comfortable reflecting on it myself and finding ways to progress on it myself.
Yep.
That's sort of how I've dealt with things of that nature.
And coming back to that point of emotions, I think even though you might not share it with us, it sometimes feels like you've got this mentoring capability. So I feel like it masks it, where you're always giving advice, you're always sharing advice, you're trying to see people do better. Mm-hmm. Who's been your mentor per se? Because I've always never seen you have a mentor. I feel like you've always done things on your own and you're very strong-minded in that sense. But obviously people have influenced your decision-making, your life.
Yeah. Firstly would have been that commerce teacher to sort of put me on this path. But then in terms of like other mentors or people that have influenced me, there's a big part of seeing, very successful family members. Vignesh, for example, you kind of see how he's played out his life. A very close friend of mine, or best friend, Sahas, and how he deals with his life. He has a very, close-knit family as well. A lot of influences that way in terms of like family life and living and that aspect. But on like the work and the business and like that aspect of things, I'm very much influenced by a select number of people that I follow purely through Instagram. And to some extent, not knowing them personally is a better influence for me because I make up the story that I'm meant to be following. They're very successful business owners in their own right. They obviously only show the best parts of their life, but I'm only influenced by the best parts of their life. So I'm like, I want that kind of lifestyle. I want that kind of living, but also, they talk about business. They talk about how they operate their businesses, and I just model what I want compared to that. So I only take the good things from those sort of Instagram influencers.
Yeah. What are those influencers? Who are those influencers for people that might want to follow them?
There's two really, and my wife will be sick of me for saying both of these guys' names because I keep showing their pages.
Yeah, we get all your TikTok reels done every day.
Probably the most important one, and probably the recent one that I like just absolutely look up to in terms of the story and how he's got to where he's got, is Lawrence Escalante in Perth. He is a business owner.
Migrant as well, right?
Migrant as well. I relate a lot to his story because he started off his life as a financial planner at AMP and now is a billionaire running a gaming business that's globally recognized, is a tier 1 sponsor of Ferrari at the Formula One. His life is just insane in terms of what he's achieved over 10 to 15 years. I think he's in his early 40s. I send you a lot of the stuff. I'll send you more. But yeah.
Sometimes too much stuff.
Yeah.
Yeah. And who's the second?
The second one is Manny Koshpin. So
Manny,
yeah. So he's obviously, if you know who he is, he's in California. He was the predecessor that I looked up to before Lawrence, and he's in business. He's very much in property and made all of his money doing commercial property. Between both of these guys, what attracts me to both of them is that they have a fantastic car collection as well. So I very much relate to that and very much relate to how they did it and what they spend their money on, which is cars. So I see a lot of alignment there and wanting to achieve that similar level of lifestyle and success.
Is it easier to make money in America versus it is in Australia? Sheer because of the population and the market sizes of things? Raising capital is very hard in Australia.
Yeah.
But in terms of making money, there's globalization that has taken place, but still it feels like it's easier to make money in America versus Australia.
Yeah. And the main reason for that is we are, in a way, a who cares market. We're 25, 27 million people. If you think about a business or a startup, unless you are purely tech focused, like you are a Canva or an Atlassian, where there's no regulatory borders to setting up a new market and entering a new market, there's no issues starting your business here. You look at Atlassian, they went to list on the US to get more capital. You look at the American market, you start off in one town, the incremental effort to go to the next state or the next major city. There's no changes in regulation. There's no changes in doing business in another way. You just set up a new market. And I'm saying this from a perspective of the businesses that I've done, which are very regulatory heavy, like financial services or property or healthcare recruitment. It requires a bit of legislative hurdles before you can enter a new market. Australia is very hard to build a tech startup or a fintech startup, which is sort of the perspective that I'm kind of coming from, is because we have a small market, lots of talent, lots of smarts, and we're all chasing the same customer. And it's very hard for us to go to Asia. Like, you just have to basically start a brand new business and all the new regulation involved for you to incrementally go from here and start selling your widget in Singapore. Can't just go across the border and do it.
Yeah, that's interesting, because I've always wondered, obviously America's the startup capital of the world, and that's what the American dream is. Mm-hmm. There's obviously money everywhere. Singapore's a big market, and it feels like people are building businesses. India's a massive market now.
Yeah.
But it's rare, like you said, to see an Australian company to be at a global scale. There's not many that we can talk about.
Yeah, 100%.
I want to touch on 3 more subjects: financial advice, entrepreneurship and risk-taking, and then what you're doing now.
Yep.
If someone wants to begin building a portfolio, they're earning $80,000 a year, what advice, what's tips or tricks that you would give them in Australia to start building more wealth than the regular person?
Yeah, sure. So I think it comes down to 2 things. The first one is the time that you spend invested. So the longer you're invested, the bigger your outcome is after compound interest.
Compound, okay.
Yeah. If you look at the numbers, it's how long you're invested in the market, whether it be stocks or property or whatever your asset class is, versus timing the market, which is like people that want to go and buy, CommBank or Amazon shares when it's low and then sell it when it's high and, keep doing that or trading that. It's about time in the market versus timing the market.
So don't think, just get started. Just execute, because if you put in $100 and you lose all of it, at least you're learning and you're in the market for it, right?
Exactly. And that's another aspect. Like, when you're starting out, you have very little to lose. The other great thing about starting off fresh is that you have access to go and borrow to invest, especially if you're buying property.
Just explain that for people that might not understand.
Yeah. so leverage is like the hidden way to outperform Warren Buffett. Warren Buffett, I think, he generates 18 or 20% compound interest per annum on his investment portfolio of his billions of dollars, right?
Right.
But if you go and borrow to invest and that asset goes up by 5%, you've basically beaten Warren Buffett's investment.
So if I had $100,
yep. So you have $100.
where would I put that money?
And you go and borrow $400. So all up, you have $500,
Which we can do through our current banks.
Which you can do through margin lending products.
Marginal lending products.
Yeah, but like, let's say if we take it a step back and do that scenario for property, right? So let's say you've saved up $100,000 and you go and put it as a deposit and you go and borrow $400,000. You now have a $500,000 property, which you've gone out and purchased.
Yep.
Right? If that property goes up by 5% in the year, right?
Right.
So
okay.
that property is now gone from $500,000 to $525,000, right?
And you've probably paid down the loan a little bit more.
But even regardless of that, so let's just say you still have your $100,000 as a deposit and a $400K loan, and the property has gone up to $525,000. Assuming that the rent covers the interest, but your $100K deposit has now ballooned to $125,000.
Right. Okay.
So for when the asset does a 5% return and you've only borrowed, a portion of it and you've only put down money for a little bit of it, your investment has gone up 25%.
Right. Wow.
And that's the benefit of leverage, because you're using someone else's money to invest in something, but you get the entire upside to yourself.
In that scenario, most people understand because it's property, and that completely makes sense. But you can do that with other things, like what?
You can do that with shares. The only difference is people are scared to do that with shares. And I work with very wealthy clients.
Yeah.
Not many even had margin lending portfolios. Only like the really aggressive ones would go and get these financial products where you can borrow to invest in the stock market. A lot of people at all levels of wealth aren't comfortable borrowing $500,000 to buy a $500,000 share portfolio, but will happily borrow $500,000 to buy a house.
Yeah, okay.
But the financials are kind of the same. There you get a rental return, you get a dividend return. The thing appreciates 7% a year over the long term. That happens in both property and in, the ASX 200 index. Similar dynamics, similar ability. You can put down 20% and borrow the remaining 80%. You can do that for both shares and property. It's a great way to get started and still have leverage as well.
And so are you saying that the person that's never invested in shares look into marginal or just play in the stock market originally, right?
I mean, if you were net new and doing it, you probably wouldn't, because again, it's that financial thing of borrowing to invest in something that you can't touch. And I think that is the hurdle that first-time investors struggle to get over, or even seasoned investors struggle to get over.
Yeah.
No matter, it's very easy to borrow money for a car because you can see it. It's very easy to borrow money and get a house because you can see it and use it. But it's not very common for people to borrow money for a thing that they log in and just see on the screen, right?
But that's how like our bank accounts though.
Yeah, but that's like our bank. But you still can't, use it as liquid, But people borrow to go on experiences and holidays, things that you can use. But it's a psychological hurdle to borrow to invest for another piece of paper.
What's some of your biggest mistakes that you've made in the financial game that other people, it would be great for other people to know about and be aware about?
2 mistakes that I would avoid or recommend people avoid. Number 1 is buying apartments, especially
for investments, obviously.
Yeah, for investments. Obviously, if you want to live in it and it's a place that you need to be. But if you're borrowing to grow a portfolio, apartments just don't grow as quickly as a brick and tile home.
Is that because, and I think you've mentioned this to me last time, if I'm investing in an apartment, technically I don't own the land itself, and it's more about owning the land versus there's another 50 apartments that are also there.
Exactly. So typically apartments are in an area where the neighboring block can be knocked down and built into more apartments. So supply is the biggest constraint on capital growth. So if it's easy for supply to come into a suburb or an area, it's going to hinder the capital growth of the existing dwellings. So if you buy an apartment, it's very likely the house across the road will have the zoning to be knocked down and put another apartment block. So it's very easy for supply to come in. And property is a game of supply and demand. So lower the supply, higher the gains. Higher the supply, lower the gains. So the first one is, avoiding to buy apartments as an investment strategy. The second one is what we do a lot of is actually structuring a property portfolio that allows for ongoing investment. And that is, using family trusts as an example to buy investment properties so that you can keep buying more and more investment properties and structuring the portfolio in such a way that the banks allow you to keep borrowing money.
Right. Okay. Yeah, that's interesting. You've built a $5 million portfolio. So if I've got 60, 70 grand, I mean, these are a bit of the secrets of the trade, but where should people be looking besides speaking to you about it?
Yeah, of course. And so 60, 70 grand, depending on what your deposit is, you could easily squeeze a $400,000 to $500,000 property. And there are places all around the country that have really good growth backed by real data, backed by real infrastructure projects where you can invest your $400,000, $500,000 and get a great property sitting on a 400, 500, 600 square meter block. And we have been investing in a lot of these locations. Clients always come and say, a lot of our clients are Sydney based and they're like, I want to buy an investment property. And it's a struggle to kind of think that, there are other regions around the country that will grow as well as Sydney, especially if you've lived in the Sydney bubble and you've seen Sydney prices do phenomenally well. That aspect is always a hurdle that's quite challenging for some people to overcome. But what we always do is go back to the data and kind of show what the data is saying, which is, the amount of demand in an area, the amount of growing incomes in an area. And also what's really impactful for long-term growth is the number of infrastructure projects coming into an area. So, this is when government's investing on a brand new port or a brand new train line or a hospital or whatever that may be. Yeah. that always, number one, there's new jobs, new industries, new diversified industries and incomes coming into the mix, which will always support ongoing growth. And when you go to a regional area, especially parts of northern Queensland, there are $300-400 billion infrastructure projects being mandated and put into smaller regional towns, which, coming from Sydney, you kind of go $1 billion, like, who cares? That's like a relatively smaller project in a place like Sydney. But $1 billion project in a place like Townsville, that's a huge impact. And, you would kind of look at those data points to kind of go, that's where people should be buying. And, there's plenty of reasons to be buying in these areas because there's ongoing investment from the governments coming in.
Yeah, that's very, very interesting. You are on the brink of, hopefully after this episode comes out, leaving your 9 to 5. And I know you've done this ongoingly. You've done it with multiple other businesses. What's the hardest part of making that leap? And I guess it's different because you're working full time and you're working on the side for this business. But back when you did your first 2 businesses, when you raised capital, what was the hardest part of leaving a full-time safety net of a job?
A salary. I'm addicted to some extent, or was addicted to a salary. I think it's one of having monthly or weekly consistent income is one of the most impactful and destroying things to go into business because...
It's probably one of the biggest... Isn't it the number one reason why most families and couples argue is financials? But
if you want to make the leap from, going from a 9 to 5 consistent, safe job to a business, you're giving up a consistent income. Because sure, you could have a business that makes good money, but even, some of the greatest businesses have fluctuating incomes throughout the year. So, inherently you're going from a place that's structured to a place where everything could turn around tomorrow and you could have no income that month or less income that month. So I am by no means saying that I've overcome this. Like, it's taken me a long time to come to a stage where I feel I can. I've always had one foot in that 9 to 5 career to fund the day to day and a little bit and the other foot in a business where it is making income, but it's on the side, but I haven't made the leap fully. And only now I'm getting close to the point where I feel I can.
What advice would you give someone that's wanting to start a business right now, but they've got a full-time job? They're not complacent. They want to do something more. What advice would you give to get started?
I would say obviously do a side hustle where you can pick up things, but also depending on what the business that you want to get into, it's very easy to sell services. Like, let's say, you want to build a technology business, or you want to get into some sort of consultancy, or you want to start a business in a particular industry. There's always a root service that you can sell on the side to help customers in that industry. One thing I learnt from working at BCG, which is building, early stage startups and investing in early stage startups, is fundamentally no one knows what product is going to work, what the adoption is.
With tech, right?
Especially with tech. If you're like trying to build a tech startup, one of the easiest and things that you can do today is to sell the service that tech startup aims to overcome. Because number one, you'll get customers, you'll be able to sell it and make a bit of money, but you'll also get first-hand insights on what are the challenges that these customers face, what are the inefficiencies in the process of doing this, and you'll make money along the way as well.
I think it's so easy these days, where back, 6-7 years ago, Fiverr wasn't predominant, Upwork wasn't predominant. Now you can work full time and use that expertise to then freelance on Fiverr and put up a profile and start applying for jobs.
100%.
There's those types of things that you can do that I think for me is, if you've got that vision of having your own startup or having your own business, and I mean, tech startups are very traditionally risky. But if you're looking for services, I think put up a profile on Fiverr.
100%.
Or even, even like what we used to do, run some Facebook ads and see if people are actually interested in your idea or what you've got to offer. And if you're getting leads or getting traffic on your website, then that's kind of a point for you to go, maybe this is a good validation point, right?
Exactly. Put something up, test it. I always advocate to test with randoms because family and friends are always too nice. Randoms will genuinely tell you whether or not they like it, and you could perceive that test through, people coming through to your webpage or liking your post, that's always an indication of traction to some extent.
In terms of your relationships around business networks, how did you build your business network? We always talk about networking is such a powerful tool because that's how you can grow sales, you can grow partnerships, you can grow your product. Most of the businesses that I've seen you've kind of been a lone wolf in that.
I would still say I'm still a bit of a lone wolf. I could be networking more. I could be meeting more people more. I'm inherently a little bit of a shy person. So it's not that, I've got like seasoned people that I can call upon for questions and stuff like that. I'm still a bit of a lone wolf in that respect. If anything, I need to learn more in that space. Again, I go back to the people that have influenced me being those Instagram people. I spend a lot of time on Instagram. You just see a lot of stuff in the industry that you're in, and you're like, if someone else is doing it, you can figure out your own way to do it as well.
Yeah. I feel like having those friends that are entrepreneurial, but you spend a lot of your time and energy socializing with those friends that are going to elevate you or
100%.
give you some sort of value. And that's why we're friends as well.
Yeah, 100%.
I think that's probably a big one. And I think a lot of people have, it's great to have, friends that you can talk crap with or talk shit with.
Yeah.
But I've always found that I get a lot more value and my conversations are a lot more interesting, right? And I feel like it's same with you and your family as well.
100%. Like even our group chats, our regular day-to-day stuff, I don't think in the salt and peppering of all those random reels and stuff, there's always a bit of value in the day-to-day conversations that we have. That's always uplifting. That's always not necessarily always business related, but it's always like, how do we make each other better? And I feel, we're in multiple group chats. There's always one aspect of that in our day-to-day conversation. And when we do catch up or we catch up in broader things, there's always shit talk, but then there's always genuine uplifting talk as well.
Now, I'm so excited to learn more about Handle. Tell me a little bit more about Handle. How did you even come up with the idea? And this one you're not doing by yourself. You've got a business partner. So how did you initially come up with the idea? Because I remember you had you started off with a Google Chrome app that helped, was it score really good properties? And I thought that was a great idea. I thought that was the business. Well, tell us a little bit about that app, because it still runs and it still works. It's a great little tool.
So again, going back to that previous thing about, both me and AJ, who, we run Handle Properties together, we've both come from tech backgrounds and finance backgrounds, and we kind of came together a few years ago, like, let's build a cool tech startup. And we tried some random crap, like there was like some weird stuff that we conceived and went to market, made websites and try to get traction.
What type of things did you try?
Oh, there's one thing that really embarrasses us that we even thought about it. It was a home loan origination business.
Okay.
Where you'd go out and you'd get a home loan and you would get carbon credits.
Okay.
I don't even know what I'm talking about, because it was some weird convoluted mix of trying to build carbon and that green concept back when it was a thing about 2 years ago, the whole thing about carbon credits and stuff, and bring it with finance, because I was reading some stuff at the time that finance and carbon is going to be the next big interjection. And even I can't even explain it. That's how weird that concept was.
If you can't explain it, then it's not the best idea.
It was the most embarrassing thing that we even did. We even knocked on VC doors, and I can't even believe that, there are some pretty prominent VC people that saw that pitch deck. It was quite a horrible thing.
But that was an embarrassing emotion, though. You feel we're laughing about it now.
Yeah. Exactly.
But you still gave it a go. You still took a leap of
trying to
come up with ideas.
Yeah, and then we also we did a lending business in India. So we did microfinance, and this was pretty cool. We actually set up a business, set up an entity in India, got the licensing in India, and we were lending our own money to randoms on the internet in India. And
own money to randoms on?
Yeah. So microlending, we were lending the equivalent of $5, $10, $15, $20
Right.
And
okay.
it was like, we'll lend it to you today, you pay us back in a week, and we had a system. And unfortunately, the regulation around that changed where you couldn't do that anymore in India through an international company. But that business was there for about 5 or 6 months. But again, both me and AJ were trying to find a business that was scalable and tech related.
Yeah.
And we tried a bunch of random stuff and nothing really clicked. But both of us were investing and developing properties on the side for fun. Like we just did it as a part of our, passion and our interest.
Passion.
And that's how we're like, what, if we're already doing something in property, maybe we should build something in property.
Yeah.
And that's when we're like, okay, let's build this Chrome extension where you go on to realestate.com, go to any property you want, and you click the button and it gives you an entire breakdown of that property and a recommendation as to whether or not you should buy it. It's a pretty nifty little tool.
Yeah, it is nifty.
But we built it and we did the same thing. We went to market and it didn't get 1,000 users on the first day. So we're like, it's got users now and they organically come and use it. But it wasn't a venture scale product still. It was just a really cool tool that people use. It wasn't a business. It was just a really cool tool. And then that's when things started to click that, hey, if we want to build, especially in this country, if we want to build some really cool tech product, let's sell the service first, learn what's involved in that service, learn all the inefficiencies in that service, and learn all the, the dreams, wants, desires and fears that customers have in that service. So we established a buyer's agency at the beginning of last year.
Yeah.
To help customers buy investment properties. It's something that we do for fun prior to launching the business with family and friends such as yourself and those around us, but also something that we feel that we could have added value to the community and actually, bring something useful to the market. So now on the side, we run a proper buyer's agency and we've got plenty of customers that we've helped over the past, 12 to 18 months. And we're sort of, hoping to be on track to go properly full time into it in the next, few weeks to the next few months.
Is the dream still around technology though? Because we're so passionate about tech. I still think that Chrome tool is a great tool in itself as a maybe a third or fourth revenue for the business. But what's your competitive advantage against the thousands of other buying agencies?
So from a service offering, we bring that holistic approach coming from financial planning and coming from accounting background. It's not just here's a property, go buy it. We answer the question of where do you want to be in your property journey 5-10 years from now?
Right. Okay.
What structures do you need to buy your properties in? You might go in your current situation and you might can only borrow 2 or 3 properties, but we want to kind of put together a structure where you can squeeze that extra 2 or 3 more properties on top of that. And you can. There are ways in which how you can do it. So we bring that edge to the program or to our agency. But the end goal is also, to learn as much as we can. And in 3, 4, 5 years, use this business and use this opportunity and learnings from this business to go and build a really cool product in this space. Like we don't know what it is. We don't know what it could be.
But you're taking the learnings of everything that you're learning from clients to go, okay, how can we actually automate this or scale
scale this and use tech. And there's a platform that I love to trade shares on, which is stake.com.
Yes.
And, when they came out, their value proposition was 1 click buy international shares.
Yeah.
Before then you had to set up a ComTech account, do paperwork and register in, your NASDAQ stock exchange and all that kind of stuff.
So they were selling convenience. Similar to what you're doing right now. You're selling convenience, but it's a service level.
We have an idea that could you do a 1-click buy property portfolio type thing.
Yeah, wow.
These are obviously grand ambitions, but to get to that, we'd rather build a property buying business with plenty of customers, a successful business, and then kind of go, how do we use this to build a scale or build a product around it? And also, we don't want to raise capital. So we're just like,
Why don't you want to raise capital? Because that deck should just have AI written all over it.
Yeah.
So raise a couple of mil with just
exactly. Yeah, exactly. And we've tried to raise capital. It's quite difficult in this country. You go and you ask and you do what you need to do, but you don't get anything meaningful in terms of being able to hire a proper team and the runway to build something meaningful. And a big part of that makes complete sense because we're in a small, untested market. there are not many opportunities to win. So VCs are also very risk averse as compared to other markets where there's lots of opportunities to win. So when you have a business that's financial services orientated, you can only operate in this country. You can't just start going, oh, tomorrow we're going to sell this in Europe, we're going to sell this in America. So, VCs are inherently risk averse, and they want to see runs on the board, and, you get diluted because of that risk averseness, and you don't get a lot of money. Like, as a seed round, you might get 500, 800, $1 million. That doesn't go super far because you'll be looking to, this is my perspective at least, you'll be out asking for money again in 6 months, especially in the fintech space. And I have a lot of biases in this particular part of fundraising, and both me and Asia are kind of similar. We would just prefer to build a really good, profitable business with clients that love what we do. It's a service-led business. It's a business that we can actually scale and build processes around and have people run for us. And there's absolutely nothing wrong running a very successful service-based business. But then could you then raise your own $500,000 or your own $1 million, park it over the next 5 years and then go at it and build your own tech product that way? And that's kind of the route that we're kind of going on.
Okay. So basically it's slightly more safer route, but it's also a lot of validation because a buyer's agency already exists.
Well, the business exists, but in terms of building a tech product around property, we know the full experience that customers go through.
Yes.
So we know
but you need that data to build a tech product around, right?
Correct.
Yeah.
Correct. Like if we went straight up, we're going to build this one-click buy property platform. Like it's untested. We don't know what clients really want. We don't really know what challenges they go through. We don't know what that service offering needs to be. And if we just, interviewed 50 people and started to build something, it probably wouldn't have been appropriate or probably wouldn't have been as impactful. And whatever money we raised to do that wouldn't have gone the way to allow us to, have that experience and build something, meaningful for that particular product. But this way we'll build a proper business and use that to fuel the growth for something else.
Yeah. Okay. Awesome. Nikhil, it's been an absolute pleasure to have you on the podcast. A lot of our listeners like the spiritual aspect of the resilience, the personality, and what it takes to build businesses. But I think one key learning for me here is the detachment from outcomes that you have, and also more of logical thinking and logical next steps. Anything you want to share, final note that you want to share with the ambitious entrepreneurs that are listening to this?
On that spirituality point, because you did mention a couple of days ago that, there's a lot of, you may not have anything spiritual to add, but I kind of do.
Okay, here we go. Okay, go on.
So this is like a way of thinking that kind of works in my head, in the sense that what is the reality that you perceive? The fact that we're in this room and all this stuff, we don't know whether it's there or not until the neurons in your brain fire to say that we're in this room, here's a microphone, we're having a chat, I'm hearing this. It's because neurons are firing. So reality only occurs the moment those neurons fire. Until then, nothing is real.
Yeah.
Like you don't know what's happening 5 streets away right now. So my spiritual taking on this is that these neurons are in my brain and they're firing to have this reality around me. So this reality must be for my benefit. Like why would my brain perceive all the senses that are coming to it for something that's not for my benefit? So one thing that I generally believe in.
Yeah. And a lot of people say vibrations.
Or like, I don't know what it
vibrations,
is.
Or the universe, when they say the universe has got their plan.
Yeah. Or
you're saying that things that are in your vicinity, the conversations, anything that's in your vicinity is happening for you.
For me. And like my logical take on it is, why would my neurons fire for anything negative?
Yeah, that's interesting.
Because it's my brain. Like why would it inherently want to do something to this body that's negative?
But our brains we do think negatively though.
Yeah, I mean, there's a whole aspect to this that's like obviously there are,
But it's an interesting take.
It's a take on how I'm like, why would my brain do anything negative? So everything around me must be for the benefit of me.
Yeah, interesting. That is spiritual.
Yeah, okay.
We'll call it on social. Nikhil, it's been absolutely amazing. I can't wait to share this with all our friends because it feels very personal.
No, I'm pretty keen.
Thanks for coming on the podcast.
Yeah, thank you so much for having me, and all the best for the future episodes.
Awesome. Thanks.